When it comes to raising capital, you have three types of investors that you're going to be talking to and looking for. You have individual investors. Those are your retail investors, high net worth individuals, accredited and non-accredited, depending on what you're doing, what type of fund you're after. Then you have your institutional investors, which can be private or public. They can be equity shops or institutional investment firms. And then you have your debt investors, which could be banks or institutions or private investors that invest in debt. So those are the three types of capital that are out there. So when it comes to raising capital, most people are looking for equity capital. So that's going to come from either an institutional investor or it's going to come from a private investor. So number one, in this day and age, on the economic scale that we're dealing with, preservation of capital is the most important thing that private investors, institutional investors are after. Number one, you want to preserve your capital. You don't want to lose money. So from an investor's perspective, when they are looking at placing capital, they're looking at putting it in things that are going to preserve the capital, number one, grow the capital, number two, and hedge against inflation, number three, which is a very real indication and a very real consequence of what's going on right now in terms of monetary policy, and especially with monetary policy moving forward. When you are looking to raise capital, investors are looking for preservation of capital, growth of capital. They want to outpace inflation, and they want to know that you know what you're doing. So you have to convey confidence to the investor that you are competent, you know what you're doing, you're solid. So that means you have to be focused. You can't be all over the place. You can't be raising capital for this deal, that deal, and this other deal. Unless that's what you do, you're a broker dealer and you're raising for different types of investments. That's a different thing. But if you're a real estate fund or real estate syndicator, if you are equity capital investor, equity capital firm, if you're a venture capital firm and you're raising money from investors to do acquisitions and things like that, you have to be focused. You have to have a solid business plan. You need to be focused on a central goal. You have to have a solid thesis, and it helps to have a track record. So if you're just getting started, you need to align yourself with other people that may have a track record. If you are experienced, seasoned, sophisticated, then your track record will speak for itself. But you have to convey that confidence through competency in your thesis and in your background of successful raises or successful projects and successful exits. And you definitely need to be an expert in your space. The keys to the vault. And that is conveying confidence through competency, and that your thesis is effective and that it works. And some people are excited about opportunities to get in on the ground floor of deals that haven't been done yet in the venture capital world, equity capital world. You might have some sort of business plan or idea or concept or technology that really resonates and makes sense. Your concept, your business plan, your investment needs to be simple. It needs to be easily understood by investors. A one-page executive summary should be sufficient to convey the value of what it is that you're offering. If it's a real estate syndication, obviously there's a lot more that comes into play in terms of the pro formas, the economics of the deal, the offering memorandum, things like that. You have your private placement, your offering memorandum, PP, private placement agreement, offering memorandum, things of that nature. But you want to keep it simple. On the initial stage of seeking capital and courting investors, you want to keep it all simple. You want to make sure it's easy to understand. And the most important thing to remember is you want to go where the appetite is for what you have to offer.